In this short episode, we're going to discuss what are the institutional investors doing with their cash. It's always good to look at what the best individuals are doing in any industry. If you're interested in learning more, continue listening. Welcome to the Red to Black podcast with your hosts Warner and Mario. And today we are looking at what are the best institutional investors in the world doing with their cash. Mario, do you have some thoughts on this topic?
Yeah, there's a gentleman out of Boston named Seth Klarman, and he runs Baupost Group, and he has about a third of his money right now in cash. How do you figure that out? You go to Edgar, SEC, and you look at the 13 Foxtrot. So the latest one was in May. He filed it. He's roughly sitting on a third of the total portfolio, total position of the portfolio is cash. So obviously he's waiting for an opportunity. He's waiting for the dealer to be on 16 and he's sitting on 20. He's waiting for an opportunity to bet big. Will that happen? Yeah. When? No idea. He has no idea. Nobody does. But the big boys, the smart money is sitting on a big pile of cash, and they're gonna put it to work when there's good opportunities. And right now they're not seeing it, obviously. That's why they've stacked up so much cash.
Yeah, so I think also Ray Dalio of Bridgewater Associates, he's sitting on a huge pile of cash. We don't have the numbers for you right now. And then obviously Warren Buffett's sitting on $150 billion. If you can imagine how much money that is, that's bigger than what most companies make in a year. So the question to ask is, why are these guys sitting on so much cash? Well, these guys are professional investors and they understand that good business deals are hard to find right now. And they know that there's a correction coming and they're waiting for it. Now, a lot of maybe some of our listeners or other people will say, well, the correction hasn't happened yet. I think it's just going to keep going up, up, and up. And we did a video on euphoria and how that can catch people by surprise. And if you look at human history all the way back to the tulip bulb, to the Mississippi real estate craze here, to the Weimar Republic, it's always the same thing. It's always human behavior that drives things to its limit. And then it gets to a certain point, like the bulls are going up the stairs, they're walking up slowly, and then the bears are literally blowing out through the windows off a cliff. Guys like Ray Dalio, Warren Buffett, Seth Klarman or Karp? Did I say that correctly?
It's close enough.
Close enough. He's got a challenging name. So guys like that have been investing for many years and they've seen the ups and downs of the market. Guys who are getting into Robinhood and new investors, they haven't seen these ups and downs, so they get caught in this euphoria. But guys that are looking at the numbers day in, day out, they have owned businesses, they understand cash flow, they understand brand, they understand competitive moats, and they're waiting for opportunities because they understand that eking out a measly 2 to 3% right now, even if you can get that, is not even close to what you'll get if you can buy a great business at the bottom of a cycle and all the returns you're going to get from a phenomenal business as it goes up for the next 10 years. So they wait for these juicy opportunities because the numbers work out way in their favor versus trying to make money. The poor investors, ineffective investors, they're trying to make money at every part of the cycle. What are your thoughts on that, Mario?
I sold a boat a couple of years ago in North Carolina to a house cleaning lady, and I knew, well, something's not right here. There's too much optimism. Not that house ladies don't deserve to have nice things in their life, but I got into a boat really cheap. I fixed it up and I wanted to flip it and sell it and put some cash to work into another boat. And the person who bought it from me was a house cleaning lady, and I knew, wow, there is a lot of euphoria and optimism in the economy when someone in a service sector job like that is buying a recreational boat. Nobody really needs a boat. I don't need a boat. You don't need a boat. No one needs a boat. A fishing boat, it's nice to have. And just when you hear the shoe shining boy talking about which stocks to buy, you know that we're at the later stages of a bubble or the later stages of a bull market, and it's just a matter of time. Human nature being what it is, it's just a matter of time until people continue to get greedy, and eventually the tide turns, and that euphoria turns to pessimism, and it goes into the opposite direction. So these big institutional investors are showing us, and they have to file this 13 foxtrot every quarter. They're showing us what they're doing. You watch what they're doing, not what they're saying. I don't trust what a lot of these guys say. I watch what they do. Don't take people's words as what they're actually doing. Go look at their actions. Go look at what they're actually doing. Go look at the fruits of their labor, and you'll learn a lot. So those 13 foxtrots tell you a lot. 13 foxtrot filings tell you a lot about what the big boys are actually doing. And right now they're sitting on a pile of cash.
Yeah, and there's a reason why we're looking at the biggest, most influential, meaning effective investors, because these guys are the best at what they do. And if your goal is to make money and grow your wealth, why are you going to look at the guys that are ineffective or don't have a track record? And most guys, you can't see what they're doing because they're not publicly traded businesses or they're not in the public sphere. But these guys have to file 13 foxtrots so you can see it. That's the benefit of a publicly traded company. So as our saying goes for the Red to Black podcast, whether you're buying, investing in, or building your own business, always go look. The publicly traded markets, the 10Ks, which is the annual report, is a phenomenal resource because it's showing you what's actually occurring underlying this business model. So you want to start a fitness franchise, which we're going to talk about in another podcast. Well, go look at a 10K because it'll tell you when you get to a certain level, this will be your economies of scale. This will be how much you make. It's not rocket science. Certain assets produce more than other assets. And pointing back to these large investors, we follow them because they're the best at what they do. If you're going to go learn how to ski, you go look at Tommy Moe, a downhill skier. He's old school, or any of the new up-and-coming skiers, and you would get tips from them on YouTube. You wouldn't get it from a newbie. So that's the key to investing. Go look at what the big guys are doing with their cash. And what most of them are doing is they're not going into Bitcoin. They're holding that cash because they understand Bitcoin hasn't really been ironed out yet. There's a lot of regulatory hurdles. There's fluctuations up and down. And they know at the end of the day, throughout the centuries, one thing always holds still standard, stands the test of time, and that's a high operating margin business or even just a solid business, whether it's 10%, 20% margin, 30% margin. What are your thoughts on that, Mario?
Yeah, Mohamed ElErian a couple years ago said go to a third cash. He told everybody, hey, euphoria is at peak. He looked at numerous indicators of the market's valuation. He said euphoria. There is no question that euphoria is at all time highs. It's smart to hedge as a shock absorber with cash, and he suggested that you should go to 30%, or a third, 33% cash in your portfolio. And I think that's a wise. I'm there. I'm around a third of my total net worth is in cash right now, waiting for an opportunity to buy or build, or invest in wonderful businesses. So as euphoria marches on, stacking up more and more cash as I personally think it's the right thing for me to do is just to keep pushing on the cash lever and continue to build that position so that ultimately one day you can put that big fat piece of cake to work.
Yeah, and I'm there with Mario too in terms of like a third of cash of my assets in cash. And what was I going to say? I was going to talk about one thing to look out for when you're thinking about investing. It's one of the most important things that we all discount. What is my return on invested capital? And we did a video on this. Before you do anything, you spent this hard time, effort building up your cash flow. Don't just give it away to get like a 2% return. Do your research, listen to this podcast, learn how to find phenomenal businesses and wait for them to trade at a great price because you built this cash. Now get it to grow at a commensurate rate that the effort you put into it. Get it to grow at a 20% return, a 30% return. Don't settle for a 3% return on your cash just because you want to make money right now. That's what Mario and I are pointing to. That's what these big guys understand. They know how efficiently to generate cash. They've been doing it so long. That's why we look at them, because they are the trendsetters, they are setting the mark on how you roll in this business effectively. You have any other thoughts, Mario?
Last thought is, over a long enough holding period, the return that you're going to get is going to be very similar to what the business returns. So the operating income of the business is going to be what your return is. Yeah, short period of time, Amazon stock can do really well. But over a long holding period, Amazon stock is going to return to the shareholders its average operating income, which is like 3 to 5%. That's what it actually does. Yeah, there's going to be periods of time where you can make a 20% return if your timing is perfect. Not everybody's timing is perfect. It's hard to know when to get in and when to get out. But over a long enough holding period, the underlying economics are going to be your return on investor capital.
Yeah, that's a great point. And we're going to do a podcast on that one in the future, because that's an exceptional point, and you've taught me a lot about that over the years. So thank you guys for listening. We appreciate your time and your efforts to tune into this podcast. We ask that you like, comment, subscribe, and as always, please share it with your friends and family. We really appreciate it. And if you're looking for articles on this subject, go to redtoblackpodcast.com. We'll see you in the future.